Hi everyone, welcome to WIC channel. My name is Rifat. So you can see a new setup. I'm just trying out something to see if you guys like it or not. It's kind of a new setup I'm trying here. I hope you guys like it. Let me know in the comments below if you guys like this kind of setup and this layout or what you guys think about it. Would love to hear from you. So we're trying out to see how it goes and we'll see from there, right? So this video, it's about mostly the stock I bought in the month of April. I mostly bought one stock and I really concentrated on that stock for this month. And the stock is Blizzard. As for why and stuff like that, we'll go in details. First of all, I just want to kind of go through the financials. This video is going to be constructed on what I call a bit deep dive, I would say, of Blizzard and what they do and all this kind of stuff, so you guys have an idea if you guys don't know. So yeah, so let's jump into it. So we have we're gonna go into Blizzard. Let's start off first by their kind of the valuation for now. Compared to the market relativity. So kind of compared to other people. So you see their PE ratio is around 19. In the industry is around 34. And also you see also their price to book is at 3, compared to industries 4.6. Overall, you can see all these things, they're pretty lower value than the industry, and a couple of stuff in the S&P also. You see, and apart from the price to sell and the cash flow, it's a bit higher compared to the S&P. And when it comes to dividend, they're more higher than also the industry. And when it comes to P forward rate, it's a bit higher. That's kind of compared to the S&P. Let's kind of go in details of like what's the key metrics. Overall, I would say they're kind of undervalued to kind of fair value. They're kind of in that layer of like very close to, I would say, but mostly the undervalued. You just see through their metrics, right? We just go right now on, we'll just jump a bit on the financials. It's gonna give you an idea as per how their growth has happened year over year, and to go through those kind of stuff. So we just for now we'll go here. So you can see here that their overview is like they have 7.5 billion of revenue. Their quarterly revenue year over year is 16%. So it's very good, and diluted earnings per share is $2.35. They have around cash around 4.38 billion, with a debt around 2.6 billion. So it's not bad. It's easily coverable with existing cash they have and revenue they have. So that's pretty awesome to see the company's not in that much in debt. It's very exciting to see. We can go also, and the financial, I don't want to bore you guys much in details, but you guys can see it's pretty much increasing from 2015 2018. They went up almost 3 billion, so that's very good there also. So what analysts expecting for this quarter, right? They're gonna announce it, I think, in May 3rd. So something like that, so we can see. But they're expecting, it's something around like 26 cents, the consensus average, while last year was 38 cents. Next quarter they're expecting 37 cents when last year was 41, and overall this year they're expecting $2.20 compared to $2.60, and next year 2020 they're expecting it to kind of be better than this year, right? So you guys can see with overall the expectations for this year is not the best, because they're overall in a kind of a transition period. That explains why the analysts are not expecting as much for this year. And we can also go by expectation of revenue. Revenue average around 1.25 billion that's expected. There's like around a sales growth drop of 10% almost, and over here's next quarter is around 8%, and overall drop by 11 to almost 12% this, like, from last year. That's kind of what's expected. So I think if Blizzard is able to kind of come out with some surprise, the stock would just like plummet, because the surprise would be good, right? So, and also can go into kind of a brief framework of all the major games they have. They have from Call of Duty to World of Warcraft to Diablo to like Overwatch to Candy Crush. They have a lot of games in their bucket, right? The whole thing of the franchise of Blizzard, right? All the companies that they own. So I mean, couple of things before I kind of go into this article that I found that kind of resumes it, and I'll kind of key out certain stuff that's very important. I want to say is that they had a couple of problems what call the key departures of management. There are a lot of like managers that left. They kind of shuffled around a lot. That kind of caused a lot of problems. They had also certain kind of layoffs that didn't help. Restructuring, concentrating on certain kind of niche clientele. Now they're going to go into more into mobile and all this kind of stuff. That kind of the change in the PR fiasco that they had, right? They were at the launch of a game. They said it's a PC game, and they're launching. Hey, we're also launching mobile, and like people like, yeah, but they're not expecting that, right? They were expecting more PC related stuff, and the audience asked a question, and they were like, but you don't have a mobile, so it's kind of like it was very hard, and that kind of PR fiasco didn't help them necessarily. And also right now with the Overwatch, there's another one called the loot box. When you certain accept, and when you go up a level, you get a loot box and you open it. So that kind of causes like there's a lot of kind of like negative around that, encouraging people to kind of gamble and stuff like this. So it's really young kids to introduce them. So there's a negativity around that that's not helping them also. So yeah, that's not going to them, right? So now it's kind of I print out this put it on like this in a PDF chart, so I can kind of copy, like highlight the important things right on the article. Mostly think it's the free to game like Fortnite that's really threatened them. That started last year, and I think people aren't anticipating the effect that it had, and we have to face the fact that Fortnite is pretty huge, and it kind of affected the bottom line of Blizzard. And also you can, like I talked about the layoff, roughly around 800 people were laid off. That's like reducing the workforce of 8%, didn't help them. And management said, we're going to drop, sales are going to dip by 19%, and earnings are going to fall 32%. So that was like completely, beginning of the year, they started with very negativity, that stock just plummet, right? So that kind of didn't help. And also talking about the stock, I didn't go through the chart to kind of give you guys a bit of idea, right? I'm gonna tend away to stay from the stock chart overall, because I think do not focus much on that necessarily, because right now they're trading at $46 fair valuation. I tend to focus on what's trading right now at the time of the filming, I mean, and not necessarily on the chart itself, because chart is what goes up can go down, and what goes down can go up. So kind of give you an idea. So just kind of get over it. I can give you the chart and what happened from the drop, right? So that's kind of so you guys can go here, so you guys can see here, since October they just been on a flea floor, and like they kind of had a couple of recovery here, then flea floor, and it's like they had a couple of recovery here from the 41, but if not, you can see here they have a big huge negativity since October. That didn't help them. So let's continue. So we're gonna go here a bit more. So we're gonna talk about the average monthly users that people say, oh yeah, the monthly users are dropping, right? But that doesn't take into account of the mobile app, right? Mobile app has tendency to fluctuate more. If it's less interesting, people move on to another game and all kind of stuff. But if you take out the King Digital out of the equation and just put Activision and Blizzard into their monthly active users, and it's overall pretty stable. You guys can see, Blizzard has always stayed around 40 million, while Activision stayed around 50 million and 40 million respectively. So so it kind of you guys can see that it stayed in that average. So that's kind of a good news to know that it's not really that much affected. And now we can move down a bit more. I'm going to go into something more interesting that they kind of doing is going into the expanding into mobile. I know apart from the PR fiasco, they're expanding into mobile, and that's an really interesting area that they're going into, because apart from North America, if you go into Asia and the Pacific place, they're really focused on mobile. People play games on mobile, not on PCs. It's really mobile. So games on that. So they kind of expanded that. And right now you see on 2018, it's roughly around worth $34 billion, the China's total game industry, right, for mobile. So so that's kind of really good segment. And This can give you is that one of the before you can expand to China, right? I'm saying this number, but you cannot expand to China if you do not make an association with a local company in China, or you have like an affiliate in China, right? So in the case for Activision, they are lucky because they have like they're prioritizing like games. Like I said, this kind of resumes the reason that they're prioritizing mobile game development, right? And they have partnership with NetEase and Tencent. So it's kind of very vital because they're Chinese companies, and you need to have an association with them to kind of create games, to Chinese market. If not, you will not be able to do it. So that kind of gives you an idea as per like now they kind of associating, they're making the games. It's going to be really interesting when the game comes out and people are going to start going to the game. So it's going to open up a new niche of monthly active users, new month revenues coming in, potential growth. So it's really right now the expanding. So that's really the future of Activision when it comes to that. So we can go back here. And yes, I think that's going to help. And also a couple of key details I would say is like more and more, like I'm putting more emphasis on mobile because this year is going to be really a transitioning year for Blizzard, because they're really kind of pivoting. They're kind of really focusing on new things, to new innovative ideas, and this is mostly on mobile gaming. And also another thing is esports. They're one of the biggest drivers of esports. Esports is valued at around $8.9 billion, and technically it's gonna become into like a $31 billion industry by 2024. That's like 20% year-over-year increase. So I'll put this article down there also. I'll put this article on the other one so you guys can read and get more details. But this kind of goes as per how esports is changing the game, and how Blizzard is one of the biggest drivers of that. They're really investing hard, creating the Overwatch League, and then now increasing the number of teams in the league. And they kind of also come up with an innovative name to kind of distinguish, Call of Duty, because now esports englobes a lot of things, right? So they're going to create like different names to englobe like Call of Duty esports and stuff like that. So it's coming very interesting changes that they're doing, and really pushing hard to have sponsorship, right, from Coca-Cola to Red Bull, stuff like that. So it's really another avenue with mobile, right? This is could be very interesting to come out. And also one final thing is they had their release of their new game. I'm having trouble pronouncing. It's called, I think, Shikru, if I'm pronouncing. That sold 2 million copies in less than 10 days. It came back in April 11th. So this is kind of a new game that was not expected revenue that could be interesting to kind of see. So kind of all kind of things, happening. Overall, I'm expecting, this year could be a good year to accumulate a lot of Blizzard stock and just kind of hold them. I think this is going to be a pivotal year for them, and in the long run, I think they are going to make right decisions like they have always done, good game development, new strategies and stuff like that to help them grow overall. At this current evaluation and the potential growth that they see coming in for them, I think it's a kind of a steal value for them compared to like the industry as per it, right? So yeah, this kind of resumes it, how this month I just pretty much blobbed Blizzard, put that into my portfolio, and see where it goes, right? Let me know, drop a comment down below what you guys think about the stock. Bought any stocks this month? Would love to hear from you guys. And also, drop a comment, let me know if you like this kind of setup. I would love to hear from you guys, to know your feedback, to know all this kind of stuff. So anyways, thank you very much for watching, guys. Oh yeah, if you like the video, hit the thumbs up, subscribe, that regular speech of subscribe and stuff like that. And also 2 links down below, for one for Facebook and one for Twitter. Would love to have you guys follow me there. And also I'll drop the links for these articles in the description if you guys can give it a read. So so thank you very much for watching, and have a wonderful day. Whoosh.